Hello dear students, welcome to Devika's Commerce and Management Academy. In income tax, depreciation is also one of the important chapter. So part of income tax, we have seen in the last class, that is stock value, how to value the stock. So that we have seen. Now today we'll see depreciation. Why depreciation related to the income tax? There are some exemptions for the depreciation. While calculating the income from other sources, income from business, depreciation can be claimed as deduction. Why? Companies having a lots of assets, buildings, machinery, furniture, etc., etc. All these assets, definitely there will be a depreciation. The value will be decreasing. When value is decreasing, so whatever is decreasing, that value you can claim for deduction while paying the tax. So that is the reason income tax, while calculating the income tax, we are eligible to take the depreciation. So we must know the rules and regulations of this depreciation, how much we are eligible, how much we can claim. So all these things, it is mandatory. As per the Income Tax Act 1961, Section 32 is clearly mentioned about the depreciation. As per that, according to Section 32 of Income Tax Act 1961, what is the definition? So, as per the Section 32 of Income Tax Act, the term depreciation is defined as diminishing value of assets. 32 section has mentioned the depreciation. What is depreciation means? It is nothing but the diminishing value of assets. Asset value is decreasing. That is diminishing value of asset. And depreciation allowed as deduction. Depreciation, because value is decreasing, you are eligible to take the deduction. Some concession you can claim. So that is the reason we are learning this chapter. Now remember few things. Conditions for claiming depreciation. Important thing. When do you claim for the depreciation? When? What are the conditions? If you satisfy few conditions, then only you are eligible to claim for the depreciation. Simple rules. First thing, assessee must be the owner of the asset. If you are saying that I have so and so assets and on that depreciation something you are calculating and you are claiming for that, are you owner of that asset? Very important thing. Assessee must be owner of the assets. It is taken on rent basis and somebody's assets are using it, then you are not eligible. You must be the owner of the asset. This is the first rule you must satisfy. Then second one is that the asset must be used in business only. Some assets are there, that assets you must use for business. Suppose a furniture we have. Furniture is used for personal, and for that you are claiming for the depreciation, not allowed. It's personal. Which is useful for business point of view, machinery, building, furniture, all these things which are using for the business only, eligible for the depreciation. Third thing, the asset must be used in relevant previous year. This must be for business and it must be relevant to the previous year. Income tax generally we calculate for 1 year, April 1st to 31st March every year. So this asset must be used for the last year, previous year, 5 years ago, 10 years ago, something you have used it, that won't be calculated. We take only for 1 year, previous year only. Okay, even if it is used for 1 day, 2 days also, you are eligible to take for the depreciation. You are eligible to claim for the depreciation. Anyhow, remember it must be for the relevant previous year. Now right now it is 2024. Yeah, April 1st 2023 to 2024 31st March. This year you must be using whatever using for that period on depreciation is allowed. Earlier, maybe 2022, 2015, all these things, that is relevant to, you can say it as a financial year. So that is applicable for the financial of that year. Now we take only the last 1 year. In the same way, next, block of assets. Important thing. You must identify the assets under block of assets. What is the meaning of block of assets? Means simple, you can remember block of assets means group of assets. A group of assets. machinery you are taking. Different types of machineries are there. All the machineries are falling under one category. That is why we say it as a group of assets and same nature, same depreciation we are going to take. Group of assets. These group of assets are of same nature, same type of machinery, same type of asset, and same depreciation we are going to calculate. What are the group of assets? There are total 5 types of group of assets are given to us. So those assets we say it as a block of assets. End of the video I'll give you a list. So this list just you have to remember it. End of the video. Anyhow, right now you remember block of assets means group of assets which are falling under one category. 5 kinds of groups, 5 kinds of blocks we have identified. For each and every block some percentage, some depreciation percentage is given to us. That only we have to follow. Okay, anyhow in every problem that will be mentioned, you need not to by heart it, just you must have an idea. So that's about a block of assets. Next thing is that for newly purchased asset, for newly purchased asset, few points you have to remember. Newly you have purchased one asset. In such cases, never used for one day. If that new asset is for the last assessment year, not even one day you have used it. Not used even one day. In such cases, no depreciation allowed. You didn't use, no depreciation. Okay. When you don't use, no depreciation. Not even used for one day also. And if it is below 180 days, means 6 months. Below 6 months you have used that asset. What would be the depreciation? The depreciation will be 50% of normal depreciation. If it is below 180 days, means below 6 months. If it is more than 180 days, means if it is more than 6 months, then full depreciation is allowed. Full depreciation, whatever percentage is there, full you can use it. If you are using for below 6 months, 50%. Full, more than 6 months means full depreciation. So this is related to the newly purchased asset. Okay, and next one is other conditions. Few more conditions are there. What are those conditions? Depreciation and block of assets only, no individual assets. Depreciation should be only on block of assets. What are block of assets? 5 assets are there. Only on that assets only depreciation is allowed. Individual assets, no. I have only one item, depreciation, no. If you have a block of assets, means same category, same pattern, same group of assets are there, then only you will be getting it. Otherwise, no. Okay, this point you remember. And depreciation can be claimed on written down value of the asset. You can claim the depreciation on written down value. You know that in depreciation different methods are there. Straight line method, diminishing balance. Diminishing balance we say it as a written down value method also. Okay. So we are going to calculate the depreciation on written down value, that is diminishing balance method only we are going to follow. Every year something we are calculating it. So after deducting depreciation, whatever amount is there, on that we will be calculating. Did you remember diminishing balance method? Reducing balance, diminishing balance, written down value method, all are same. Should I remind you? Say for example, one asset, this asset cost is say 1000, easy calculation. This is 1000. We purchased in the year of 91. 91 we have purchased. 91 to 92, 10% depreciation we thought. 10% means it comes to 100. This is for 91 to 92. After 91, after deducting the depreciation, what will be the value? The value will be 900. Now for 92-year depreciation, how much you will calculate? On which amount you will calculate? You are going to calculate on 900. So 92-year depreciation will be on 900, 10%. That comes to 90 rupees. 90 rupees also will deduct it. We are getting 810. For 93-year depreciation, we'll be calculating on 810. 810, 10%, it comes to 81. This process of calculating the depreciation, we say it as a written down value method. Written down value or diminishing balance method or reducing balance method. This method only we are going to apply. Are you getting it? Written down value method only we are going to apply. Suppose right now 93 year we are in the 93 year. 93 year we wanted to calculate the depreciation. Means this amount only we'll see. After deducting amount whatever is there, on that amount we are going to calculate the depreciation. Written down value method. Okay, this is what we are discussing. Simple points, easy to remember. And also remember types of assets. Two types of assets you will find always. Two types of assets. One is tangible assets, another one is intangible assets. Both the assets, tangible, intangible assets, both the assets are eligible to take for the depreciation. You can claim for depreciation of both the assets, tangible, intangible. What are tangible assets? Can you tell me some examples? Yes, tangible assets are buildings, furniture, machinery, premises, tangible. Visible. Intangible assets? Intangible which are not visible. Intangible assets means generally we take patents, copyrights, goodwill. Okay, these are all intangible assets. Both will take. We consider both. So this comes under the block of assets, the list which I am going to share you end of the video. Okay, this is about the types of assets. Now next we'll focus on the computation of depreciation. I need your focus. How to calculate the depreciation, that main principles. This everything is very important, you have to remember. Without this you cannot go for the calculations of depreciation under the Income Tax Act. What are the rules and regulations? Just focus for 5 minutes, you will understand. If you understand this very easily. Now, computation of depreciation. This table you remember. First thing is that two items you have to remember. One is depreciation on assets. Under depreciation of assets, newly purchased asset and asset purchased in the earlier period. Newly purchased, asset purchased in the earlier period means before that only you have purchased. Already you have been using it. This is newly purchased asset. Depreciation on assets, what type of asset? Two types of asset. And next column we are saying use of asset. How you are using this asset? Newly purchased asset, we can use it in two ways. Used less than 6 months. If the asset is used, newly purchased asset which is used less than 6 months. If it is less than 6 months, what would be the depreciation? The depreciation would be 50% of normal depreciation because you have used less than 6 months. Less than 6 months only you have used. So 50% normal depreciation you are eligible to claim. Less you have used it. If you used more than 6 months, below 6 months, 50%. If you are using more than 6 months, the normal depreciation for full year, whatever depreciation is there, entire normal depreciation you can claim. Below 6 months, 50%. Above 6 months, full depreciation. This is related to the newly purchased asset. Clear? Next, asset purchased in the earlier period. You already purchased the asset. Not right now you are not purchasing. It's not new. Already purchased. There are two cases. One is used for minimum 1 day. At least 1 day you have used it. Minimum, if you have used even 1 day also, minimum 1 day also, normal depreciation you are eligible to claim. Normal depreciation according to the asset. If not used even for 1 day, not used even for 1 day, not used, you didn't use, you are using here at least 1 day. At least 1 day to, it can be n number of days, 365 days also. If that is the case, normal depreciation. Not even 1 day we didn't use, then no depreciation allowed, no depreciation. Here, full depreciation. Okay, this point you have very easy to remember. Newly purchased asset, if used less than 6 months, 50%. More than 6 months, normal depreciation. The second asset is asset purchased in the earlier period. Earlier period used for minimum 1 day, then normal depreciation. Then not used even for 1 day, no depreciation. Not used, no depreciation. Simple, this table you have to remember. Apart from this, few points you have to remember. Producing goods. Depreciation is allowed to those companies who are producing the goods. If not producing, no depreciation allowed. Simply you have purchased some assets, furniture, machinery, this and that, but you are not producing goods, then you are not eligible. Second thing is plant and machinery installed after 31st March 2005. This is very important. You are eligible to claim for the depreciation if you have purchased the plant and machinery after 31st March 2005 only. Before that period, if you have purchased any asset, especially plant and machinery, you are not eligible to claim for the depreciation. Point to be noted. Generally, most of the time, you won't find any asset which are purchased before 2005. No. It's almost 16 years, 19 years. So old asset you won't find it, so need not to worry. Anyway, a point to be noted. Next, additional depreciation also allowed. With normal depreciation, you are eligible for the additional depreciation. That additional depreciation rules we are going to find here. Rate of additional depreciation. Okay, 3 points. Able to remember, producing goods and plant and machinery installed after 31st March 2005, and additional depreciation also you can claim. What are the additional rules, that we'll see. Now before that, there is one more point. Ship, aircraft, plant and machinery for residence. These 3 items, and also transport vehicle does not come under plant. These 3 things: ship, aircraft, plant and machinery for residence, and transport vehicle, this doesn't comes under the plant. Under plant it doesn't comes. Please remember this point. Now coming to the, as we said, additional depreciation is allowed. This is general normal depreciation. And a block of assets list also I am going to give you, just you can remember that depreciation will be charged according to the block of assets. Apart from that, you are allowed to take additional depreciation. What are the rules of additional depreciation? Simple 2 rules, remember. One is asset used more than 6 months. You are eligible for additional depreciation if the asset is used more than 6 months. If you have used more than 6 months, means more than 180 days, then 20% on actual cost of the asset. Used more than 6 months means you are eligible for 20% of the cost of the asset. And asset is used less than 6 months. More than 6 months, 20%. Less than 6 months, 10%. Able to remember? Additional depreciation. More than 6 months, 20%. Less than 6 months, 10%. Very important point. This is very important, please remember. And now, did you understand this table? If you understand, yes. Another important thing, method to calculate depreciation under written down value. WDV means written down value. As we have discussed, always we calculate the depreciation on written down value only. How do we calculate that? Remember one thing, this format. One is opening balance of written down value. We'll take the written down value of opening balance. Whatever is given in the problem, that we take. To that, we add purchases made during the previous financial year. Whatever purchases we have done, that we are adding along with the expenses related to the purchases. We are adding the purchases. Okay, add and you'll get some amount. If you find any sale proceeds, deduct it. Less. Sales made, sales made during the previous year. Purchases, something you have done, add along with the expenses. If you have done any sale proceeds, that is to be deducted. Adding purchases, okay, deducting sales, so that you get closing balance of written down value. We are starting with written down value of opening balance, adding purchases, deduct sales, you will get closing balance of written down value. On this amount, whatever you get on this amount, we are going to calculate the depreciation. Able to remember? On this amount you are going to calculate the depreciation. Directly whatever amount is given here, that we don't take. We consider the purchases, add, we consider the sales, deduct. Now you are going to get closing balance of written down value. On this amount you are going to calculate the depreciation. You are eligible to take the depreciation for deduction of income tax on this amount only. Am I clear? Now let's focus on the block of assets. Block of assets means group of assets which are having the same nature and depreciation is also same. That list is given on the desktop. You can just check it out. I'll just read out. Writing on the table, on the board, it will take lots of time and energy, so I'm giving you the list. Please see. Serial number, nature of asset, rate of depreciation is given. First category is buildings. Buildings, block number 1, blocks wise. How many blocks are there under building? 5 blocks are there. Block number 1, used for residential purpose. If it is for residential purpose, rate of depreciation is allowed 5%. Block 2 is mentioning the same building used for non-residential or commercial purpose such as office, factory, showroom and godowns, etc. For that, depreciation allowed 10%. Residential 5%. Non-residential 10%. Now block number 3 of building. Used for hotels. This building is used for hotel. So 10% is allowed. Block number 4 is temporary structure. Temporary structure means especially for buildings, temporary something you are arranging. For that purpose 40% allowed. Block number 5, acquired on or after 1st September 2002 for installing plant and machinery for the business unit engaged in providing infrastructure facilities. In such cases 40%. Total buildings related, how many blocks are there? 5 blocks. Each and every block point of view, some percentage is rate of depreciation is mentioned. Now second category is furniture and fittings. This comes under the block number 6. All types of things, for all type of business, furniture fittings are there, means it is 10% allowed. Third category is plant and machinery. Plant and machinery, here we have block number 7, 8, 9, 10, 11, 12, 13, 14. So many blocks are there. Each and every block, some rules are mentioned. Block number 7 is saying that it includes motor cars, buses, lorries used in the business for running them on hire. Please remember this point. If you are using any of these vehicles on hire, then 30% eligible. Then block number 8 says it includes only motor cars used in the general business, 15%. Block number 9 is it includes plant and machinery used to manufacture the goods or for running the business, 15%. Block number 10, it includes aeroplanes, aero engines, life-saving medical equipments. For this, 40%. Next, block number 11 is it includes containers made of glass, plastic used for refills, 40%. Block number 12, it includes computers including computer software, 40%. And block number 13, it includes equipment used for energy saving devices, 40%. 14 is it includes air and water pollution control equipment, 40%. So all these blocks, 7 to 14 blocks are related to the plant and machinery. Next, fourth block is here intangible assets. Intangible assets means generally you can take patents, copyrights, goodwill, etc., etc. Fifth one is related to the books. Related to the books, block number 16 and block number 17. Block number 16 says if SSC is engaged in the business of lending libraries, 40%. And block number 17 says if assessee is having income from profession. Here two categories are there. Annual publication of books, for example finance acts and annual budgets etc. 40%. BBTs here other than annual publications, for example textbooks and referral books, reference books etc. So this is about 40%. So this table you have to just identify and remember it, need not to by heart, because in example according to this table only you will be given percentage. But identify the block. What is that block? Block of assets means now you got an understanding group of table. Each block is saying different assets, that you have to remember. And also entire concept. If you are thorough, then only we can go for the practicals. Anyhow, take the screenshot. Am I clear? It's very easy, need not to worry. Only the thing is you have to remember, understand this and remember this depreciation policy. So what are the conditions to be satisfied? What is the percentage you have to take? This if you remember. General computation of depreciation, this table you remember, and also rate of additional depreciation. And you know that written down value, how to calculate it. Simple things if you remember, it will be very easy. By the way, there are many subjects already covered in our channel. Please check out the playlist and don't forget to share these videos. Practice well and have a bright career. See you in the next class. Good luck.